Hey guys, how's it going? So today I wanted to go over some numbers in regards to interest rates and price decreases to compare today's market to potentially the market in the future if we see home prices drop and interest rates rise. There's been a lot of talk in the market about a tsunami of foreclosures coming to market due to forbearance, and I just don't see a bunch of foreclosures happening. So today we'll go over these numbers and we'll get right to it. So I do see more homes coming to market and the market leveling out, which is going to give buyers an opportunity to purchase this year in 2021. Again, no one has a crystal ball, but we are seeing more inventory come to market and prices slowly decreasing, coming back to earth, and we're not seeing those $30,000 over asking. So I know what you're thinking. I'm a realtor, so I probably have a biased opinion. I'm trying to persuade people to buy homes, but right now I'm just talking about, I have boots on the ground and going over some data. So between August and November, we're definitely going to see more homes come to market due to forbearance. There's going to be a percentage of those people that aren't going to be able to keep their properties. Roughly about 1.1 million properties will be coming to market. And again, this is going to vary. It might not be in your market specifically. And I know in mine, in Orange County, we won't see a lot of inventory come to market due to forbearance because we do not have a lot of FHA buyers or VA buyers. With FHA and VA, you put little money down, so these people don't have a lot of equity. So the homes coming to market, some of the people might have lost their jobs or the bank just couldn't adjust their rate for them to keep the property. Like I said, not all of the homes will be hitting the market that are in forbearance. Out of that 1.1 million, we'll probably see 20 to 25% of those properties actually hit the market. So if we're going off of 25%, that's roughly 300,000 properties that'll hit the market between August and November. So here's a little pro tip, guys. So in October through December, roughly, the market slows down no matter what is happening on in the world. People just aren't moving as much during those times due to holidays. So here's the thing. If you've been looking for a house, I would highly recommend October through December. Take a look, see where the sellers are at. Sometimes you can get sellers who actually really need to sell and move right away, so you're able to negotiate a little more. All right, guys, so let's break it down. Let's say you guys want to buy a property here in August 2021. Interest rates today are roughly around 2.75. Let's just go off that. That's on a 30-year fixed. And let's just say the purchase price is $400,000 and you're putting 20% down. $320,000 financed over 30 years at 2.75 leaves you with $1,150 per month that you are paying down towards your loan. We can't forget property taxes. We're going to go off of 1.1% here in California, and you go off of the original purchase price of $400,000, which leaves you with $4,400 divided by 12 is $366 per month. As you can see, with the purchase price at $400,000 on a 30-year fix at 2.75, you're roughly around $1,516 per month you're paying to own that house. So let's take a look at what it could potentially be like in the future with lower prices and higher interest rates. Let's say that $400,000 house is now worth $350,000 and we're still putting 20% down, so we're at a $280,000 loan. $280,000 financed over 30 years at a 4.5% interest rate, this is fixed, is roughly $1,240 per month. So again, with that original purchase price at $350,000, we will multiply that by 1.1% for property taxes, which is $3,850 divided by 12, which is $320.83 per month. So this leaves us with a grand total of $1,560.83 that you're paying for this loan at a 4.5% interest rate. So guys, as you can see, you're roughly $45 difference, and this is going down the road. This could happen in 4 years, this could happen in 3 years if prices decrease and interest rates go up. Again, this is hypothetical, but I just wanted to show you guys that today's rates are really good and prices are high, but you can see things kind of shift, and although it may be a little cheaper, you're still only $45 off, which again, we're not even taking into account you paying down that loan over the next 3 years instead of renting. So I think there's definitely some plus and some upside to purchasing right now, especially if you're young. Again, I don't advise you to buy a house if you don't have reserves in the bank and if you don't have a steady job. But if you're planning on holding this house more than 5 years, again, we could see another 2%, 3% a year increases in home values. So you don't want to miss out, and you got to think more long term. Everyone always freaks out about the market crashing and things going south for real estate. But again, over time, history has shown the richest people in the US own a lot of real estate. So if I were you, I would try to get on board as soon as possible and try to not listen to all these headlines and make moves. You'll see that purchasing your first home, whether it's a rental or you're going to live in it, it will definitely change your life. And just hold on to it as long as possible. And for those of you who are just saying he's a realtor trying to sell and get people to buy and hopefully get a lead, well, guess what? I bought a house this year, so I put my money where my mouth was. Again, I got really good interest rate, below 3%, and I actually got a wedge deal. You can look back at one of my videos in regards to my first Airbnb, so check that out. Again, thank you guys so much for watching. Hopefully you continue to watch, and I can't wait to show you guys my next video in my new Airbnb that I plan to buy.